And joining us now here on Market Talk, we've had him on the program a few times and very happy to have him back with us here today. Bryan Irey with Crossroads Co-op is joining us right now for market analysis. And Bryan, it is always good to talk with you, sir. And I know we were chatting off air. Things have been hot in your neck of the woods, much like a lot of us, but hopefully you've been taking as much advantage of AC as you possibly could here this week, Bryan. Thanks for joining us.
You bet. Anytime. Yes, limiting outdoor activities at the moment. Although today it's the high is supposed to be 70, and we're supposed to have 2 to 3 inches of rain. So out here in the west, we're going to get a little break from the hotter temps and higher humidities. Well, the humidity will probably remain high, but temps are definitely lower.
I was going to say 70 sound a lot better than 100 with a heat index of 115. So you are one of the lucky ones there, sir. That is for sure. Yeah, you are one of the lucky ones. Well, this heat and dryness has been having an impact on corn and soybeans across much of the corn belt here this week, and some of our spring wheat as well, no doubt, probably getting affected late season there. Overall, you look at the markets wrapping up the week on Friday for the most part. Beans have been finding some premium, especially with the hot, dry weather. Corn and wheat have been relatively mixed. I mean, just starting with the thoughts of weather, feels like that's one of the big drivers in this market here this week, Bryan.
It really does, and we've not had a particularly volatile week in futures relative to what we've seen throughout the rest of the summer. I mean, we've flattened out a little bit, quiet night sessions with low volume. But yeah, it does feel like we've had some support here this week. I think, as you mentioned, weather's had a lot to do with it, especially on the soybean side. I think where the most of the deterioration is probably going to take place. I mean, corn probably loses a little bit of its potential, but we're definitely hearing a lot of talk about soybeans too dry and smaller beans and lower yields, lower pod counts, and all of that type of information that flows out when the crop isn't finishing well. But again, I think what has kept these futures markets in check has been the demand side of the picture, Jesse. That still remains that elephant in the corner, especially in terms of corn. I think the balance sheet being a little tighter in soybeans, you've seen a little more volatility in soybeans this week. But from the corn side, it really feels like we're headed to a place where if you took 500 million bushels of corn off of the supply side of the balance sheet, we're probably still going to carry out 2 billion bushels of corn in 23-24 with what looks like an exaggerated export number, and with the feed number being probably a little high given the cattle numbers issue.
Yeah, and I'm glad you brought up the demand aspect, because you're 100% right. We've heard a lot about just the poor export demand. Weekly export sales this past Thursday weren't anything to write home about again. And obviously we have a lot of concerns there. We're up against a big crop coming out of Brazil and South America. I wonder too, though, what about some of the demand here and on the U.S. side with end users, the river terminals and more, and look at cash basis and, getting some of that crop out through the Gulf, et cetera. I mean, what are you hearing on the end user side right now, Bryan? How are things looking there as we're getting set up for harvest here in a few weeks?
Well, it's very interesting, and I touched on this in my written commentary earlier in the week. You've got the Southeast and the Delta, Texas, getting pretty deep into harvest, and that market, especially Louisiana, starts to feed the Gulf pretty heavily. You start to see the Southeast poultry and hog markets get covered up with corn out of the Southeast. And basis just gradually starts to deteriorate the farther north you go, and we've seen some of that this week. We've seen basis numbers in the Eastern Corn Belt start to back off because demand isn't as good as it had been. And I think that is just going to gradually snowball to the point that we get back to more historical type basis numbers, just due to the fact that we don't have a big export program, and livestock numbers are lower. I've heard elevator bids as low as 70 under over in the Eastern Corn Belt for corn, which that just seems like so cheap. We're still trading. We traded corn this morning here for the last half of September at 200 over into Greeley, Colorado. So that 70 under has to look very enticing to folks over in the East at this point.
Well, and I think too, you brought up the harvest in the South, and obviously, yeah, they're deep in that here. And moving forward, as we get to the fall and get the bulk of the Corn Belt going, though, and we think about the overall demand picture, China's obviously the elephant in the room there. They keep going to buy from Brazil. We've seen a bit of activity pick up on soybeans, but really, unless we can do something to demand here and get it moving, it feels like we got a bit of a tough road to hoe ahead of us here for the next few months, Bryan.
You are dead on, and I think again that is the biggest challenge for the producer here in 23-24 in terms of marketing is how do you get past that? And at the end of the day, there's no cure for low prices like low prices, and it just feels like both the futures and basis probably have to deteriorate to the point where you begin to generate export demand and force not only China, but the other Asian countries back to the United States for some of their supply. A little bit of talk of dry weather starting to surface in Brazil, some concerns about getting crops in here moving forward. It will be interesting to see how that plays out, whether that gets legs or not. That could keep some support under U.S. futures here for a while. But I really do feel like, as painful as it is for the producer to hear, that markets have to go lower. We've got to get rid of some of the supply somewhere because we're not going to absorb it all into the U.S. demand base this year.
Well, we're talking with Bryan Irey from Crossroads Co-op here today on the show. Bryan, let's think about as well on the livestock side. Cattle, feedlot country, no doubt this past week has been under stress with the heat. And I know that's had an impact, but really this cattle market's been a bit choppy as of late. Let's start there. I mean, what's your thoughts in this overall cattle market? Are we gearing up for another leg higher, or have we maybe topped out?
I think that is a really good question. And I was having this conversation with a cattle feeder within the last hour. You've got a multitude of issues going on there. And the biggest, I think the biggest example that I saw in last Friday's Cattle on Feed report of the lack of cattle is Nebraska and Colorado are down 100,000 head year on year in the feedlots out here right now. That has been a disturbing trend. Obviously, we've killed off a lot of the cow herd. You and I have talked about that in detail in previous discussions. And the futures have been very choppy. And I think one thing that happens, and we saw this on the grain side, markets take care of themselves. I mean, gradually you find a way to get corn from the Corn Belt to our part of the world when it's deficit. I think the next thing that these protein markets have to deal with, specifically the cattle market, is the potential of large volumes of Mexican and Brazilian beef working their way into the retail market here, because with the economy and the condition that it's in, it's very difficult to believe that the consumer is going to continue to eat beef when it's at the values that it's at today. So somehow that problem works its way out. I think that that's the path of least resistance. And in the meantime, it's a bidding war for feeder cattle today. We have lots out here that firmly believe that if they pay high prices for feeder cattle, it's going to reward them on the back end. And we have more disciplined outfits that feel like, we can't put something in here in our lot that just doesn't break even. And those lots don't have cattle today. I mean, they have 50, 60% of capacity. And we certainly feel that on the demand side in the corn market as well.
Yeah, and thinking about the corn market, I mean, as we gotten corn down here around the 480 level for a time, we've rebounded a little bit off that, but is this an opportunity for our cattle producers to lock in some feed needs possibly here as we head towards the fourth quarter, Bryan?
We feel like that's the case, and we've seen some of the more aggressive consumers get some corn priced this week on breaks down around 475 in the December board. I think that's prudent. I think you have to layer yourself in there as an end user. I think that, futures could go farther lower, as we were discussing a few moments ago. They could get down, you could see these corn down in the 4.25 to 4.5 range. And you definitely, as an end user, want to consider getting extended coverage on there, I think. But on the other hand, we've seen a lot of feedlots hesitant to buy corn because they just don't know what their head counts are going to be moving on through the winter here.
Yeah, that's a great point. And it's something I think we're going to have to keep our eyes on just very closely here. And, thinking about rebuilding that herd and more, and that's going to take time. It feels like too, Packers have tried their best to slow chain speeds to kind of back things up a little bit. But at the end of the day, with cattle numbers being so low, I wonder how much longer Packers can really slow down chain speeds, etc., before. Well, I don't know. Very interesting situation right there, Bryan.
It is. Yeah, it is. And if you complicate the situation that you're discussing with the slower chain speeds by importing foreign beef, it, maybe some of those chains come to a halt for a while till the situation does correct itself. Just one other side note there, and is I'm hearing more and more talk from ranchers about not retaining heifers because, they're worth $1,700-$1,800 as a 6.5, 7 weight feeder. And they're really not wanting to put that of an expensive replacement back into their herd. And they may wait a year or two here to start retaining heifers until prices do go lower.
Well, Bryan, as we think as well, I know the outside markets, the economy, that's having an impact across everything, grains, livestock, et cetera, interest rates. I know we've had some chatter about this Jackson Hole meeting here this week, and then you watch some of the economic things around the world, and just overall, the cost of money, interest rates, et cetera, that's had an effect on demand. The dollar rising once again, all of that is something else that we just have to kind of keep our eyes on too in the broad scheme of things, Bryan.
It is, absolutely. That's an uphill battle, I think, for no matter what facet of commerce you're in today. It's, it just costs more to do business. I think that, you start to get doubtful receivables out there. The dairy industry is in just horrible condition with lower milk prices and high inputs. We hear a lot of complaints there, but to your point, yes, it's even as far as commercial grain companies go, it costs 2 cents a bushel to carry corn for a month here 2 years ago, and that number is closer to 4.5 or 5 cents now, depending on how much interest you're paying with your financial institution.
Well, Bryan, great thoughts on everything that's going on. Before we let you go today, anything final you would want to share? Anything you want to reiterate for producers as they're looking at their marketing plan and just trying to navigate things here, especially before we start rolling the combines more here in the next few weeks?
I think really the focus should be on, as a producer, trying to get some more sales on if you need to make them here. I think anywhere north of 480 on the board, 480 to $5, it probably is going to pay for you to get rid of bushels that you can't hold on your farm. I don't think going into storage with them is going to be a profitable situation without some kind of driver that pushes the market higher. And we run into a series of reports here through September into early October. We get the monthly WASDE and crop production reports there early in September, and then at the end of the month we'll get stocks in all positions, which kind of gives you a final number in terms of 22-23 corn remaining, and then you roll on into the October WASDE and crop productions reports. So those are all going to be market movers in one fashion or the other, and I would have to lean today towards those numbers being negative. But to cap that, I think you still have to keep an eye on the Russia-Ukraine situation too. That is a very volatile situation over there that is going to have impact on gray markets. It has for the last year and a half, and I think it will moving forward here as well.
Well, we do appreciate the time. Bryan Irey with Crossroads Co-op. Thanks for joining us here on Market Talk, and have a great one. We'll talk to you again soon.
Sounds good. Thanks for having me, Jesse.